Hey everybody, welcome to the Trading with Ashley show. I hope the title did not scare you too much. It does look like we do have a little bit further down to go. I mean, we did not get the recovery from dipping below that 200-day moving average. We didn't get the recovery as soon as we should have if that was going to be it. So next week will be interesting. We have a few dynamics going on next week. First, you have the April 2nd situation where the tariffs are going to be put into play. Now, if we happen to get some reprieve, it doesn't sound like we're going to, but if we do, that could change the story a little, but that will create more volatility, more worries, and it looks like we could go a little bit further down. But I don't want you to be panicked. I want you to be prepared. So that's the point of this video. Now, when it says sell now, I don't have a list of stocks you should be selling right now, but I am going to show you exactly how to go into your own portfolio and evaluate your stocks to determine if you should sell those or if you should ride out the storm. And there's a very specific formula I use, and I wanted to share it with all of you. Me and my members had a workshop today where we went over this together on a live call, and I showed them exactly how to do it. And so they were real busy today getting all of their portfolios in play and getting everything organized and set up for whatever comes next week or the next couple of weeks. Now, remember, you've all heard that if you are out of the market for the 10 best days in a given year, then that dramatically cuts your returns. And so my whole goal, at least for all of my community members, or to get them in a spot where they can participate in the upswing with good quality companies that they know in the future, at least longer term, will do incredibly well for their portfolio. But to do that, you've got to have cash. So I did want to share with all of you, I'm going to show you exactly what I did, and I'm going to show you how to go in and do it for yourself. But for those of you that don't have the luxury of doing what I'm about to show you, and for some reason you just feel stuck and you're like, I don't know what I'm going to do. My portfolio is just going down there and I don't have any more cash to add to it. I don't want to lock in losses. Then all you have to do, as long as you're in quality companies, is wait. And sometimes waiting is the hardest thing to do, isn't it? It's just, we want things and we want them now. But if you're in a great company, I want you to do one thing. This is very simple. I want you to go to your favorite app. It could be Robinhood, Yahoo Finance, Google Finance. I want you to put the ticker symbol in there. And instead of just looking at the day or even the month or the year, I want you to click out max. Go down to, you usually have to scroll over and then it'll show you the max price action on any given stock. And if that max price action shows that your stock consistently has gone up year after year, I want that to provide some comfort to you, knowing that it is just a waiting game. And so I don't want anyone to be shaken out of their quality positions just because of fear. Because if you think about it, we have media all around us. You have all of us on YouTube. You have something on every channel that you turn on. You have TikTok. You have Twitter. And one negative story feeds on another. So everybody is sharing the same negative news cycle. But the truth is, nobody really knows. We can look at technicals, we can read the tea leaves, we can look at the gurus, and we can look at history. But nobody really knows. All any of us can do is give our best assessment of everything we see and then share with you our perspective on how you can potentially react to protect yourself or set yourself up for enjoying the ride up. And so I do want you to realize that. I mean, a lot of times I just think the negative news data can be overwhelming. Hence my thumbnail. I mean, it's clickbait, right? And I know that those are the titles that seem to get your attention, but it really is true though, because I do want to show you what to sell. Because the main thing I want for anybody that watches me is the ability to participate in the fun days, the days that are going up. And I do know that you need cash to do that. So let me take you into the computer. I'm going to show you exactly what I'm looking at. And if it helps you, then all the better. Now, each platform is different. I am in the Robinhood platform, so I'm going to show you how I do this in Robinhood. So the first thing you do in Robinhood is you go to Account, and then you go to Investing, and it's going to pull up all of your plays. And here you can sort them. The first thing that I do is I like to look at my stocks, my plays that are winning, and then determine what I'm going to do with them. So what you want to do is start by total return, and then this is going to list your total return. You can do it from highest to lowest. I like to start with the highest, and so I'm looking right here at Palantir. So this is a winner for me. Now, if I was short on cash and I was trying to build up additional cash so that I could take other plays, then this is one that I would cash in either all of it or a portion of it to build the cash, because this is going to help me use this money for either buying Palantir lower than we're trading at now, which is at 84, or I could use it for other plays. And then you just go down the line and look at all of these and determine what you want to do with your winners. Now, here's where it gets interesting, and I don't think a lot of people think about this, but as you're going down, I want you to start focusing on the plays that are barely winning or they're barely losing, because this is where a lot of opportunity lies. And I want you to think about it this way. If your particular play is just sitting stagnant, it's not making money, it's not losing money, then you could be cashing up with that money and you could put it in some high conviction plays once we feel like the market has settled down enough. And so I want you to really consider going through these and looking at each one individually, and then looking at the amount of money it would free up for you to take advantage of that. And then after you look at the ones in the middle, then you go all the way down to the bottom, and you have to decide what you're going to do with your plays that are losing. So let's look at my plays. This is Tesla. Right now, this particular play is losing $4,600. If I was strapped for cash, this would more than likely not be the one I want to cut my losses on, because it locks in a loss. But I would do that if I felt like there was no future in Tesla and it was not going to come back up. Well, how do you know if there's a future? How do you know if your stock is ripe for a rebound in the future? That's when you go to a site like Yahoo Finance and you look at the analysis tab. So I'm about to do that, and I'm going to look at a couple of these plays to determine if I think that there's life left in them. So let's look at Tesla, Robinhood. I don't know that you've heard a lot about this one. We could look at that, or instead, why don't we look at Google? Maybe these three that are losing money. Let's go see what it looks like when I pull these up and I look at the fundamentals for the company. If you're doing this in Yahoo Finance, once you pull up the stock, then I like to go to the analysis tab. And this is going to give me a lot of information that is going to be very helpful to help me make a better decision. If you just look at their earnings, you can get a better idea if they're meeting estimates or falling below. And Tesla has fallen below, but it is dealing with the car delivery dynamic, so you have to keep that in mind. My investment in Tesla has to do with its future revenue. But this is another thing I want you to look at. This is showing you the revenue versus earnings. The main thing you want to see when you're looking at a chart like this, you want to see growing revenue and you want to see growing bottom line. And so that's the yellow part here. And the higher that the yellow bar is in relation to the revenue, the higher the return that they make. So every dollar that they bring in, they're able to do more with it because they have an efficient operation. What you don't want to see is a negative return. That would be a company that had issues, and that more than likely investors, if they're in it, that those are the companies that they're going to bail on if we have this other leg down. And then you'll be left holding a company that at this point nobody wants, because that's considered a riskier company when they're not making revenue. And I'll show you a company that has these bars inversed here and why it would be a riskier play to hold on through the current market. The next thing you want to consider is looking at analyst recommendations. And here you've got a mix of buy, strong buy, hold, underperform, and sell. But most often when there's a strong opinion about a company and everyone feels like it's a bullish company, you'll see a lot more buy and strong buy. And then you can't ignore the analyst price target. So right now, the target is averaging at about $330 a year from now, and it's currently trading well below that. So this alone doesn't convince me to hold on to the play. But It's the future that has me wanting to hold on to this play and actually double down and add more as it's falling to bring down my average. So that's Tesla. Let's go look at another one that was a losing trade, Robinhood. Now, Robinhood is super impressive. This one I'm looking at and I'm thinking, wow, this is an incredible opportunity because they continue to impress me. Now, I have watched and studied a lot about Robinhood, and I really like the changes they're making to their platform, the way that they are attracting new business, and now they're going to get into the banking. So I'm super excited about them, but that is not showing up right here yet. But let's look at what is showing up. So they continue to outperform on their earnings. So this is a stellar company. And look, they're having growing revenue, little back up here, but then it went way up. But look how they have been able to hold on to the revenue that they're bringing in. This is very impressive. And you do not see this quite often with a company. And so obviously, it'll be tough to continue to perform at this level, but the simple fact that they did and they were able to jump this much after all the major changes they made with their platform, this gives me confidence in this company. Now, if you look at analyst recommendations, very strong buy and buy. This one has more support than I saw for Tesla. And then let's look at the price targets. 66 is the average. It's got a high of 105. So we're trading well below that right now. So this is one I would not want to cut my losses on because if I just hold tight and maybe even average down, I should be very happy a year from now. All right, here's Google. This was one that was losing, but when I look at it on the analysis tab, it really tells me a story here that shows me this is a stellar company that I want to hold on to and that it will rebound just fine. And if you look right here, you see the earnings. Everything's been green and positive. They have a really good revenue to earnings relationship. You see increasing revenue and increasing earnings. And then their analyst recommendations super strong and their price targets are super strong. So these are the stocks that you don't want to have paper hands and let them shake out of your portfolio only to be chasing if that recovery comes. These are going to be some of the first stocks that investors jump back into. Now, I promised I'd show you a company that more than likely would not have investors that want to stay in it when the times get tough. And let me show you why. So this is AST Mobile, ASTS, and I actually think this company has, definitely a bright future. But investors are not going to take as much of a chance on companies like this unless their overall portfolio is healthy and they feel like they should have a risk appetite and add a little bit of risk to their portfolio. And here's why. I mean, you can see the revenue is very small, but then the losses are significant. And this is because this is a growing company. It has yet to actually prove itself. Its business model is not fully baked. It does have good analyst recommendations, but not a lot of analysts have evaluated it. And it does have a decent price target. So this is one, if you're going to hold on to it, you might want to put a trailing stop loss to ensure it doesn't pull back too much, and it'll kick you out if it does pull back more than you're comfortable with. Maybe on something like this, you'd want like a 10% trailing stop. Then let it settle down. And if you can, set buy orders below that 10%, maybe at 15%, maybe at a 20% drop, so that you can preserve your capital to buy risk assets like this when they're truly beaten up and when you can truly enjoy that V-shaped recovery when things come back. I hope that helps each of you that needed this pep talk, that needed these instructions, that you now have something that you can go and do. You can spend the weekend pouring through your different portfolios and decide what you're going to do with each individual play. It will make you feel so much more put together. You'll wake up Monday excited about what the week is going to bring instead of super nervous about another drawdown. And that's my goal. That's the whole reason I'm here, is to help give all of you insight and give you tangible things you can do to help control your destiny, right? All right. I hope you all have a wonderful weekend. If you're with me, Trading with Ashley, come rain or come shine. And it is raining right now. If you can see the raindrops on my car, come rain or shine, I am here with you. If you're with me, Trading with Ashley, there is no trader left behind.